Hi guys, it's Sapient, and in today's video, I'll be answering your questions. Some people replied to the video tutorial request, and they had some requests. So, we'll be looking at those requests together, and I'll try my best to provide an answer. Right? So, so far, it's just three responses, because two has already been there before, which I have made a video on. So I'll be pointing out the three, and I'll be talking on them in this video. So the first one is making the overall market bias, and that is a new request. The second one is, what day in the week do I trading? I have answered that already. And the third one is the importance of having and building a strong, focused, and disciplined mind in trading. Then the fourth one is risk management. And the last one is the simplest way to analyze the market, or the best strategy that can easily be spotted in the market. So number two and the last one, I have already made video on them. So today we are going to be talking about the first one, the third one, and the fourth one, right? So, and I like the way they are arranged. So, we'll just be taking it in that order. We'll take the first one, take the second one, then we take risk management as the last one. So, yeah, let's get into the video. So, it says making the overall market bias. So, if I would talk on that, what I'll say is that when you want to get a bias, right? When you want to get a bias, you have to how will I say it? You have to come to the market um with zero emotions, right? You have to come to the market with zero emotions. Right? You don't have to be sentimental about it. You don't have to be sentimental. There's a time you are sentimental, but as a retail trader, or as a trader that just wants to take a fraction of what the market is offering, you are not meant to be sentimental. Those guys that are meant to be sentimental are big guys, you know. So you don't even have the money to be sentimental to take a sentimental trade. So, but that still said, don't be sentimental when you trade, right? So don't how will I say, don't stick to a trend. Right? Don't think a trend can never end. Oh, because you have been taking shells, and it has already been something that, oh, you like taking shells. Then on that same currency pair or instrument, then you start seeing something like change of character. And because you've been taking sell already, you still like want to continue that sell. Then you start telling yourself that, oh, maybe that change of character is just a reversal, blah blah blah. You eat your first SL, said the same thing. You eat your second SL, you said the same thing. Third SL, you say like, oh, I still feel this market is going to sell. Instead of you to like break the chart down and see if we are already moving in on a new trend. So, as I said, don't come to the market with uh, with one side. Don't be sentimental, and don't get married to a trend. So let's jump into the charts. So yeah, on my chart we have gold XAUUSD, right? So I have done a video on how I caught this movement, or now I caught this movement. Yeah, so this movement right here, I caught this movement, and I made a video and I shared with you guys, right? Before price got to this, so I caught it from this bear bear movement right here. So I caught it just at the right time, and I shared a video on how I got the trade, what made me want to buy from there, So if you have not seen it, it's on my Telegram channel. You can go there and watch it. So we have gold. So if I am going to um, make a bias, or if I am going to say, okay, yes, this is my outlook, this is my bias on gold, what will I do? So let's just say I have not touched gold. Let's say I have not touched gold. Let me erase this stuff here. Let's say I'm just looking at gold as a fresh instrument, right? And I'm looking from the perspective of the daily time frame. Right? I'm looking from the perspective of the daily time frame because as a day trader, that is what you want to do, right? That's what you want to do. But currently, I'm more into swing sports. I am still holding this trade. I am still holding this trade. This movement, I have a position currently running from this. I think yeah, from this region, I have a buy position running. So, and since I think 15th of last month, I guess. So, as I was saying, if I'm looking at gold um, as a fresh pair, so what I want to consider, I want to consider the initial trend of the market, right? I want to consider the initial trend of the market. What has the market been doing before I came? So, as you can see, obviously, the market is in a state of buys, right? That is, we are bullish. We are bullish on what? We are bullish on gold. So that is my first observation. So the first thing you do is you make the obvious observation, which is the physical, like what you can see in the market, the trend you can see. So you can see that it is bullish, right? The next thing is that I want to study the structure. Right now, I can tell obviously that okay, this is a bullish market. But now I want to analyze the structure of the market so I will know if we are still going to move up or probably something is about to change. So I want to identify some highs and some lows. So the first thing I can do to make everything easy for me is to identify the highest points of this. So as the most easiest thing to do. So this is the highest point of this week. Um, I don't know why that is not doing, but let me try again. So that is and I think that is gold's previous highest point, or sorry, recent high. So this is the highest point in gold as of now. So yes, we have marked uh we have marked that high. We have marked that high. Good. The next thing I want to do is I want to identify the load that was responsible for that high, the load that was responsible for that high, the load that was responsible for that high, which is this guy right here. So that was a load that was responsible for that high. This is the low responsible because we had a break of structure right here. We had the break of structure right here. We had this pull back and push up. So we have this low as a low that was responsible. We gave birth to this eye right there. So now I've pointed out um, the eye and a low. Pointed out a high and a low. So I'm just going to do this so because I can't really ignore it. So I saw this break of structure, right? So if I'm going to mark that break of structure out, So what market really did is that after breaking that structure, market came back to retest that high. So market came back to what? Market came back to retest that high. So if you notice, I made a video on GBP USD too. I revealed the next direction of GBP USD, which it has already done already. So I told you that GBP USD did something. It repeated a pattern, like it copied it. It copied that pattern. So I think gold is actually doing the same thing. So I will show you why I said gold is actually doing the same thing. So let me zoom in a little bit. So now, then label that. What should I label it? Let's say BOS retested. BOS retested. So let's label that BOS retested. Break of structure retested. So as you can see, when we had a break of structure, like when this is the load that was responsible, and we pushed up and we broke that high, right? We broke that high to confirm a new high, which was this one before. So we had a little bit of pullback right here. This region we had a little bit of pullback, which people that trade inducements or retracements or whatever they call it, they'll call this an inducement, right? At least a place where price will come, give a little bit of reaction, make a lot of traders interested in that zone for the buy, and at the end of the day, we use them as liquidity, as liquidity. So I mark that out as an inducement. I mark that out as an inducement. So I've said it. I don't need to label it. I've said it already. If I mark this place out as an inducement, so we can say that price now took out that inducement or the liquidity there, and tapped on this break of structure, which adds this imbalance or fair value gap. Those I call it fair value gap or imbalance. So it has this or inefficiency. It has this gap here, and it has filled it. It used it as a tapping point. Yeah, let me put it that way. Use it as a tapping point. So I'm pushed up. We pushed up. So what do we notice there? We notice that break of structure, right? We had an inducement, price came back, used this imbalance on this break of structure level, means this level is a very, very good level if somebody hurt it, because there's an imbalance right there. There's this eye, took out, it tapped on the break of structure, it tested on it and pushed up. Then we broke this eye, right? We broke this eye. So we are going to label out this eye because this eye is now a previous eye. So we can say another break of structure, right? You can see another break of structure. And notice one funny stuff. This break of structure also has an imbalance. This break of structure also has an imbalance. So we now what you will notice now is that price has come back into that region, right? So you can also label this as what? You can also label this as break of structure retested, right? BOS retested. Let me increase. So we can also label this break of structure retested. That is, we had a break of structure right here. We have this imbalance FVG, fair value gap, and as price went up, right, created this liquidity zone right here. So we can mark this out. So let's just mark this place out, or this place as our inducement. So let me see IND as our inducement. So we can see that also repeated um price also repeated here. It repeated a price action, right? So we had the same thing. We had a break of structure retested, and inducement also break of structure, inducement, price retested um using this fair value gap or imbalance, right? Using this fair value gap, and price is already moving up. So what can we tell as an analyst? What should be your motive? Because you can tell that from here, we when price did what it did by taking out this inducement, then testing this break of structure and pulling up, we can see that its goal was that it broke this eye, right? It broke this eye. So what we can just say is that judging from that, we should be seeing this as our next target. We should be seeing this eye as our next target. And seeing that eye as our next target. So if you ask me that Sapient, is this enough? Well, simple terms, I'll say yes, it's enough because we studied the pattern, we've studied the structure. We can tell we are in like we are not trading against the trend. That is the general trend, which is in the bullish distance. So we are not trading against the trend. So, but to be on the safer side, we can still look at some things, right? We can still look at some things. So what are those things we can look at? So let's say we have looked at the left side of the chart. Yeah, we have looked at the um, previous price actions. That is this ones right here. So let's look at the recent ones, right? Let's look at the recent ones. What happened after this inducement and this break of structure was tested? So let's look at um this price action. Then whatever we see there, we either add to our confluence or try to make us probably rethink what we are doing, or still try to be average on our position. So you can see that when price is tested, it created a sort of range here. It created a sort of range here. So you can see price was dancing in this region for a little. It created a sort of range, but later we broke that range and we took up, came back again, came back into this range, came back into this region, broke this high, and we are dancing around this region. So we might not really understand too much of what this is saying. So let's move to probably a 4 hour time frame. So let's see a 4 hour time frame. So this is this is a 4 hour time frame. This is a 4 hour time frame. So let's see what we can get on this 4 hour time frame, right? So after we broke, we tested this break of structure and price is pushing up. So our goal is to find out if price is going to like break this high or if price is going to rally, if price is going to rally down. So we can't really tell. So let's see, right? Let's see what we are trying to achieve here. So let's talk on internal and external um, movement, right? So as you can see that this year, this this high is like the highest place that we can see. That is our HH higher high. So that is a new higher high. Price has not broken it yet. So we have to ask ourselves: is price going to break it? And this is our low, right? This was a low that was responsible for this high. So both of them are like the the conversation of the day, right? They are both the conversation of the day. So let's just mark out this low. So it's a battle between eyes, a eye and a loan now. So we want to see uh if this low is a strong low that is price will not break this low and price is going to break that high, or if that high is going to maintain its position for a while, and let's say it's going to be strong and we'll take out this low. So let's find out. So I'm going to mark out this low. I'm going to mark out this low. Nice. So let me so we now have, let me remove this since I've marked that out. So we have this low, we have this high. What is happening inside inside this high and low? That is what we want to notice. So we can say that when we created this high, price pushed down and created something sort of internal. So if we are going to judge, if we are going to judge by that, we see that price created this mini break of structure. Yeah, price created this mini break of structure, and eventually price broke it. Right, price broke it. So let me let me delete this one so that you will not be confused. Or let me put it this way. So let me put it this way. Good. So we had a break of structure or change of character, as you might call it. So this is not really a change of character because it's still inside this. Assuming we broke this low now, then we can mark that as a valid change. We can mark this low as a change of character, right? So, but let's, for the sake of what we are trying to check, so we have a change of character and we have this wick right there that serves as a break of structure. So what I'm trying to do here is that I'm trying to be as once I don't want to be. one-sided, right? I don't want to say because oh the trend is bullish, then I should ignore what I'm supposed to ignore, what I'm not supposed to ignore. So we have this change of character, we have this break of structure, price came up. So I don't know what price reacted on right here, but let me just mark that place out. So price reacted on something there, maybe that little week right there. So price reacted on it, and price reacted well, and price went down. Price broke this structure. Price broke another structure. So now the tricky part of it is that if you are not careful here, you might actually make a mistake. You might actually make a mistake. So now we have this internal break of structure, right? We have this internal break of structure, internal BOS, IBOS. So the thing is that we have to be careful. And why do I say we have to be careful, right? Sometimes market does change like this, like create this um bearish internal bearish move just for a purpose. So you have to ask yourself that this um this bearish move that the market is playing, why is it playing it? So we have to recall that this break of structure that was retested here, that is this region, that is this region. So it's retested, right? And before before we can erase, like, just try to create a scenario whereby this side is not there yet, right? Just create a scenario whereby this side is not there yet. Only we have only this movement, this up movement, right? Now, for us to be able to say, okay, price is coming back into this BOS to retest it because of what we saw on the daily time frame. Now, price has to come down, right? Price has to come down to that region. So price has to come down in any kind of a way, and this is what price chose, right? Price did this internal move, this internal bearish move, just to react on um this break of structure. So we cannot really say, okay, probably internally price has want to move to bullish. We can't really say that because um, we are doing it to test this break of structure. Assuming when price is doing this internal bearish move, we broke below this level right here. We Let's say we now break down and um break this low right here. Um, Let me label it low so that we know strong strong low, and bring this strong low right here. Then we'll say wow. Then we can actually say price is going to sell very hard, right? You can say price is going to sell very hard, assuming when price was coming down from here, it still managed to break this fair value gap around this region and still continue to move down to break this strongly. Then we can say yes, um, price is probably going to be bearish from henceforth. But what price did was that when it got to the fair value gap, it started pushing up. Right. So let's study what is happening next to see if we are actually going to break that high, or maybe we should still chill. So let's let's see what happened when price reacted to the fair value gap. So as you can see from here, you can see that price created this little, even though it was not the break of structure, but it created that little I as uh, probably an inducement. So if we mark that out, if we mark that out, we can see that if it serves as a break of structure, right? It serves as a break of structure. So if we want to be discreet about this stuff, if we want to be discreet about this stuff, we will also call this low right here, we'll call it a strong low. And why will we call it a strong low? You can see that when price reacted on that fair value gap, it pushed up immediately, and price reacted on this level right here, right? Price reacted on this let's say a supply zone right here, and price pushed down. So what price did was that when price pushed down, it could not break this low. It just tested it. It could not break it, right? Meaning this low is strong. It could not break it. Then it pushed up. Then still pushed down till it broke this. Till it broke this supply level, right? Till it broke this supply level. So we now have this internal change of structure again, or change of character, as you may call it. So now price has pushed up, creating mini break of structures, and so we can see price. Okay, price did this pattern of mine that I like. So this pattern, so price did this. Price created this pattern. This so this is what I'm talking about. So as you can see, what I drew here is what happened here. So you can see this move. Price broke this high, created left an imbalance, and price made this liquidity. So I call this O pattern, or this O price action, a liquidity, right? Because it created like a double bottom, right? And with SMC, a double bottom um, either a liquidity, is is most times a liquidity, right? So we created this, or can call this fixed demand zone. can call it a fake demand zone, right? Because price bounced on it, created this uh, false push up and pushed down. So what really happened in this at this time is very clear and very funny. If your TA game is good and you understand price action, you would understand that this level is so neat. This level right here is so neat. The price action that happened here is so neat. And being that it happened on 4 hour time frame, it means if you move to let's say 15 minutes time frame or 1 hour time frame, and considering that it is gold, you would have caught a very nice trade around this place. You would have probably caught a sell and also a buy, but that is not the purpose of this video. So what I just want you to know is that price reacted again on this level and broke this high, right? So if I'll mark out, if I'll mark out that high, I'll mark out that high. So all we are just trying to do is we want to make sure that we know if price is definitely going to take out this high or if we are not taking out the high, right? So now we have this internal break of structure to IBS. Now the internal break of structure. So we are going to see now we are in the midst of the live market, right? That is what is happening in the market now. So what we can see is that after this break of structure, internal break of structure, we had this pullback, right? So if I zoom in, we would see that market created this pattern again right here. Yeah, right? Market created this pattern right here again. Yeah, market created that pattern again here, and I'll mark that out. I'll mark this out. So the thing is that if I'm able to share this video on time, and if I actually draft out a setup from here, you should probably take it. Probably take it. So I'll mark that as my liquidity X, my liquidity and price are tapped on this zone right here. So I'll take this whole block. Price are tapped on that. So what I'll be waiting for, I will not be entering aggressively. I will not be entering aggressively. What I'll be waiting for is if I'll take this trade, what I'll be waiting for is that I'll be waiting for this guy to be swept, this eye to be swept. So the reason I'll be waiting for this eye to be swept before I take it is that the reason I'll be waiting for this eye to be taken out before I enter this trade is that when we close above this eye, this candle right here, when we close about above this eye, I will be able to say that this low is what this low right here is a strong low, just like just like this one, right? Just like this one, because when this low happened and pushed up, and this reversal happened and was not able to break this low, it was because we now broke this um this eye right here. We broke this eye right here. So if we did not break, if we don't break this eye, I will not enter this trade for a buy. So until we break this eye right here, then I would put my entry at that eye, and I'll be expecting price to come back to that eye and push up. I'll be expecting price to come back to that eye and push up. That is where I'll be entering, or if I see another entry, if I see another entry confirmation, I would use I would use it, but I will not enter this trade if we don't take out this eye. Even though I said, oh, it has printed out that pattern I used to use that I like, but if we don't break this eye right here, I will not be entering that trade. So let me just go ahead and mark out that eye. So I'll mark out that eye and I'll put XX. I'll mark out that eye and I'll put XX. So I don't want to do much on of whether, because I'm seeing other things. I'm seeing other things, but I don't want to talk on them yet. But let's just let's just stop here. So you can see that was how I drafted my bias. I The first thing I did was that I stated the obvious trend of the market, which is bullish, and I um talked on the trend too, right? I analyzed the structure. Yeah, analyzed the structure where I was talking about the break of structures that were retested, and how I saw that price is actually repeating it has um what it has done what it has done before, right? Price repeating what it has done before, and going to see what is happening internally, right? Going to see what is happening internally, and going to see what is currently happening right now. So here, my only fear here is this, because every high and every low in the chart is liquidity, whether you like it or not. Every high and low is liquidity. So if if I'm following the the trend line strategy, so let me delete this one. If I'm following the trend line strategy and I draw a straight, let me remove this somehow, and I draw a straight line, let's say from this place, let's say from that place, then I'm probably expecting price to push down, right? Probably expecting price to push down. So if I draw another um trend line again, let's say from here, if I draw another trend line again, let's say from here, right? If I draw another trend line again. So price is probably going to break. Price is probably going to break it. Right? But it is trading. That is another outlook, right? That is another outlook. But um because I don't want to trade against the trend, and keeping the I'm using the overall trend as a shield. That is, I'm trading according to overall trend, and because majorly we have not broken the major lows and the major lows. So I would not say I would not stick to what I'm seeing on the trend line. I'll stick to what I'm seeing with what I did on the so my bias is actually bullish, right? My bias is bullish, but if worse comes to worse, we analyze and let's say we now start changing structure, we would analyze it and by God's grace we'll make the best of it. So I will not even be surprised if price breaks use this level right here, all these lows as liquidity and still comes down. But as long as we don't break this low right here, as long as we don't break this low right here, I might still be looking for buys because price might just take out liquidities because there are a bunch of liquidities around this level. So so price might just come to sweep all of them and still continue its move up. So as I always say, my father and your father, they are not the market makers. You don't own the market. So you you analyze what you see, not what you think, right? And you execute what you see, not what you think. As trading view always say, leap. Always look before you leap. So I think that's the first question. And the second question is the importance of having and building a strong, focused, disciplined mind in trading. I don't think I'll talk much on that. I will just tell you that well, if you don't have a disciplined mind in trading, you will not actually pay for it. Your money will pay for it. So if you unless you are plucking money from trade, right? So if you have hard earned money that you don't want to lose in a stupid way, I'd advise you to not to be indisciplined, right? You have to be disciplined because market will test your patience, right? Market will test your patience. It will break you and it will make you. There are days whereby you would do the right thing and everything will still turn out bad, right? Not because uh not because you are not good, because time, right? Life, everything is just happening at that time. Right? Everything is just happening at that time. So you need a disciplined mind. You need a disciplined mind. Like taking um like three trades. You promise to take just one trade, right? You promise to take just one trade, and because you eat SL on the first one, and you think, oh wow, the second one will eat TP, then you take it again, you eat SL, and it keeps happening like that. If you are not disciplined, you will blow your account because you keep market is very seducing sometimes. It will give you um it will give you how will I say it will give you price actions that you think, wow, this is it. Then before you know it, stop loss. So you have to be disciplined. You have to stick to your decision, right? You say you want to take just two trades per day. No matter the loss, no matter the win, you have to stick to two trades per day. If you say, oh, you don't want to risk more than 1%, no matter the loss, no matter the risk, you have to stick to your plan because without discipline, you will just be losing money unnecessarily. Without discipline, you will just be losing money unnecessarily, right? So it is very, very um it is very, very important that you are disciplined because if you are not disciplined, you lose your hard earned money and you will hurt yourself mentally. So I don't think I should talk much on that because I think it is very straightforward as it should be, right? Very straightforward as it should be. So as you can see, I'm on the 15-minute time frame and I can see the price action more clearly. So I'm still waiting for price to break out that structure and whatever I see, if I post this video on time and you guys watch it, I would share it with you. So I'll share the trade with you if if I'm picking it, right? So, and the third question is risk management, right? Risk management is not a topic that should be discussed much on, so because everybody on the internet is screaming risk management, right? Even if it is not being followed, everybody is screaming risk management here and there. You must use your stop loss, you must know the exact loss size that you are going to use so that you will not lose as much as you want, discipline, blah blah blah, right? So you need risk management. Always manage your risks because a study shows that um, if you have an account as a trader, if you have an account, let's say a prop firm, that is, you are not always going to make it pay out, let's say 5 times. Though it happens, right? It happens, but averagely, average trader will not make it pay out um, like 5 times before you lose the account. So if there is that kind of odd that there is higher probability that you will lose your account. So you know that yes, there is a probability that you lose this account. Why not like give it a chance, right? Why not give it a chance to stay? Why not just why will you just blow it unnecessarily? Why would you just blow it unnecessarily? You know, there's a part of it that is saying, okay, there's a probability that you lose this account, right? But you have to give it that kind of fight to say, okay, yes, stay a little bit, right? Stay a little bit. Even if you know at the back of your mind that you might blow this account, but you don't have to do it stupidly. You don't have to do it in a nonchalant way. So your risk management has to be on deck because at days where your technical analysis is failing, your risk management is what we owed you. Your risk management is what we owed you. There are a bunch of videos on risk management that you can watch. I made a video on position sizing as a risk management technique. You should see the video if you have not seen it. So things like this will help in your trading, right? So you have to be focused. You have to be disciplined. Yeah, you have to be focused. You have to be disciplined. No matter what. If not, you are gone, right? If not, you are gone. If not, you are gone. And also, and it's in that light of being disciplined, right? Apart from trading or technical analysis, as a trader, you have to be disciplined, right? 2 months, 6 months into trading, right? Somebody has taught you technical analysis, you're already taking trades. Don't open a signal group yet. Don't open a signal group yet. Don't tell people to bring their money yet for you to trade for them. Trust me, at that point in time, everything will go wrong. I can bet it with you. At that point in time, everything will go wrong. Yeah, you start having bad trades, right? And you are not ready for it mentally. Even if you open a signal group, make it free. Make it free so that when you start eating SL, you will not feel as bad as if it is paid, right? Especially if you are somebody that overthinks a lot, because you will blow their money, you'll not be able to look at their face for as an account manager, right? You need to give yourself time. Give yourself time. Enjoy the process, all right? I know you are broke. We are all broke. We are looking for money, right? But enjoy the process because if you start doing things that you're not supposed to do when you are supposed to do it, it will affect you. So 6 months into 8 months, in fact, a year into this thing, you are not supposed to like bother about those things yet because you are not ready for it. You don't have the money to. If you lose somebody's account and the person paralyzes for you and threatens you, what do you want to see the money to refund? Right? Create value first. Create value. Create content. Right? Create content. Make yourself valuable and also have a stream of income. You don't need signal 6 months in. You don't need a signal group because you have not seen anything. You have not seen the ups and downs of the market in 6 months. You have not seen the ups and downs of the market. Things can really go wrong, right? When you start something like that, and if you are somebody that thinks a lot, you'll not be able to look at them. You feel somehow when you eat stop loss the first time, stop loss the second time, you now hit stop loss 3 times in a row, you start doubting yourself. You start thinking, oh, what are these people thinking about me right now? What are they doing? What are they saying? What are they? Oh, God, God. Things like that. You start feeling bad and you probably relent in dropping the signal and it will affect you later on. So give yourself time, practice. If you want to do that thing, get a trading circle. Get a trading circle. You guys might still be broke. Get a trading circle. You guys should share. Maybe it's going to be a demo account. Share those things with yourself. You can now share the signals among yourself because you know that okay, you're among your people, right? You're among your people. Anything that happens, still demo, nothing is going to happen. Even if it's real money, you know it's among your people. Then when you see that you are confident in doing those things, you see sometimes you can treat trading as business, right? Signal providing is a business, right? It's a forex business, it's a financial business, it's a financial service. So I'm not talking on technical analysis right now or charts. So because I've been seeing these things a lot, 6 months, 3 months, 4 months into trading, you're already saying drop accounts for management. I own a signal group, blah blah blah, things like that. Doesn't make sense. Now let me tell you how it goes. Let me teach you how it goes. Right? When sometimes see, let me tell you, if you take 10 trades, even as a good trader, if you take 10 trades, there are some times whereby just 4 of them will go well. To be honest and to be realistic, just 4 of them will go well. But because you are just 6 months into trading, you have 4 trades that went well and six that did not go well. You feel somehow. Maybe that's when somebody will tell you, they blow their money. They did this, they did that. You will start feeling somehow. Like you start doubting your ability. But the truth of it is that that is business. Even in any other business, there are bad days, right? There are bad days. Doesn't mean you should start feeling bad about yourself. That is why you have to tell them that there is no, you will not be catering to any risks when it comes to signal service. That is why they have to prioritize their risks, their risk management, right? So 10 trades, you have 4 wins, right? So as a good trader that you have to be able to push them in a way that that 4 trade will reflect very well on their account, and that 6 loss will be minimal. The loss they will get will be minimal, right? You don't just drop signals like a goat. You don't just drop signals like a goat. You drop it in the hope that you make money, and even if you don't make money, you won't lose much. So you keep they are this thing at mind. You can make a poll, right? You can make a poll. Let the account size that they be trading, let it be known to you so that you will know the kind of trades you'll be giving them, right? Not trades that will blow their account too much, not currencies that will empty their account like gold. Right? Imagine you're trading gold on a $2 account, $5 account, $10 account. You are going to ruin your life before you know it if things are not going well, right? So as a 6 months trader, you don't need signal for now. You still need to grow. You still need to enjoy the process, right? You still need to enjoy the process. But if you say you want to open a signal, fine. Fine. If you want to open a signal, make sure you are good on your own. Apart from technical analysis, make sure you are mentally okay. At least when you have losing streak, you still be able to like show up and not just show up like a goat too that you just show up. You after you have learnt your mistake, that is when you now show up, right? After you have learnt your mistake. So I think that is enough. If you still want me to talk about the business of forex, you can DM me and yeah, peace be unto everybody. I think I've answered the questions. I'm going to drop this video now. So you guys should please, if you have any question, text me, drop a comment. Or my DM is always open, especially on WhatsApp or X. So text me. I am going to definitely reply. So yeah, let's end this video. Thank you.